Hello everyone. Today in this video, we're going to look at a very important pattern and one of my most favorite patterns and one of the most reliable patterns in technical analysis. So this pattern is the inverted head and shoulders pattern. And one of the reasons I like this inverted head and shoulders pattern is because it has this pattern occurs and once a breakout occurs in this pattern, it gives you really good profits, and this sometimes also might be the end of a very long-term downtrend, and it might signal the start of a new journey, and it might also give you multi-bagger returns. Now before that, this week I also posted a video on Kaplan and a video on SH Kelker. I hope you liked that video, and if you did like that video, do post in the comments and let me know whether you like this video and whether you like my analysis. Okay, so let's jump into this video, and today in this video also what we're going to look at is some of the key reasons behind why this inverted head and shoulder forms, how to trade the inverted head and shoulders, and what happens after the breakout, what kind of targets can we expect, and finally I'll show you also a few examples that have occurred in the past. During the code crash, there were a few stocks which had a beautiful breakout, inverted head and shoulders breakout, and also want to show you some stocks which are still breaking out from the pattern and still have the potential to give you much higher returns going forward. So without wasting much time, let's get into the stocks itself, and let's look into the reasons starting with. So I'm starting with the example of Wabag. So Wabag was one of the stocks that I posted recently on Twitter, and it did give some really decent returns. I'd not say massive returns, but some decent returns when it had a breakout, especially for swing trades. If you're looking for good 20-30% in the short term, then these kind of trades can really work out very well. So as I said, I'm going to focus first on why this H&S pattern actually forms and what is the psychology behind this. Now, as all of us know, markets are controlled by millions of people. So it's finally the crowd psychology which actually takes affects the stock price and why patterns occur. So in the case of inverted head and shoulders, which is what you're looking here, I'm on the weekly charts. That's the chart time frame that I want to look at when I'm on weekly charts, and the charts and the patterns that occur on weekly charts give you much higher returns than chart patterns which occur on hourly or 5-minute charts. Okay, so we're going to look at weekly charts only today. We're going to focus on the inverted head and shoulders, and the first thing, as I said, is psychology. What is the reason behind this pattern, right? Now, usually what happens is after a stock goes up a lot, then the stock starts coming down, and this downward trend kind of continues, and it goes all the way down, and you see some strong points here. So this is the recent high, then it came down, then it formed a high, then it again comes down and formed a high here. So there are multiple points where it keeps forming lower highs. So when I say lower highs, this is a high, then it forms lower high again, then it forms lower high again, and then again forms lower high, and then kind of panic. There's a panic sell-off which happens, right? Now before that, the first thing that you want to focus is on the pattern itself. Now this looks like an inverted head and shoulder. By inverted head and shoulder, what we are looking at here is just similar to your shoulder that you have, right? So we have a left and a right shoulder, and now this is exactly what you're going to see, and you have a head, right? Now that's exactly what you're going to see in the pattern itself. So you have a left shoulder, a head which is above your shoulders, and then you have a right shoulder here. Now one of the rules or one of the reasons why this forms is, so there are a lot of value investors, there are a lot of mutual funds who want to buy a stock at a lower price, right? Now that's why you see these ups and downs, right? So some people buy here, then the stock goes up and then starts dropping, and some people find value at the stock here and then it keeps dropping. Now usually this inverted head and shoulders forms at the end of a downtrend, right? So at the end of the downtrend, if you see this left shoulder, so initially people buy this stock here and then there is a drop. Now people are selling because a lot of people are stuck in the stock and they start selling and then it drops. Now people find value here, H&Is, mutual funds, FIs, these people find value here and the stock starts going up, right? But then there is a lot of people who are stuck at this price over here and they start selling, and that's why you see at this point the price comes back again to this level and it kind of again starts dropping, because a lot of people who bought here might also book profits, and people who are stuck here want their money back and they start selling. So the price stops dropping again, and now this phase is where actually the panic happens in market. So these kind of bottoms usually form in the kind of code crash kind of bottoms, or when the company has some really bad news and it's kind of forming a major bottom, And then once it drops, so in this case, the price has dropped, from this level, it has dropped almost 60%, right? Now, when the stock falls 60, 70%, and that's when people start finding value again. But what you want to notice here is the volumes when it drops is not that high, which means the number of people who are selling in this fall is actually quite less compared to the number of people who have bought the stock in this rise, right? So volumes start dropping and the price also stops dropping drastically, and that drop in price also signals a strong surge in the price again, and that forms the head, right? Now this entire surge is because the number of people who are selling is reducing drastically, but the number of people who are finding value in the stock also increases drastically, and the stock starts surging up, right? And that forms the head. Now, again, as I said, people who bought the stock in this price again want to book profits because they have bought at low, or people who bought here want their money back. So they kind of sell the stock again, and then it forms dropping again, right? Now, what you want to notice here is the drop does not, go much beyond this left shoulder here, right? So usually the right shoulder and left shoulder would almost be at the same level. A small drop here and there is fine, but if you look at this level, the left shoulder was at this level and the right shoulder has not gone below this. Now that shows that there is a strong buying that's happening, because of which that price is not dropping below that point, right? So now we saw the reason for the left shoulder, the head. There is a panic. People, the stock drops. People buy the stock, and then it goes again. And a lot of people again are kind of accumulating the stock around the zone. Now, always remember, when a stock, after reaching a major point, there's always going to be a drop. And if people do find value in this company and they think that this is really undervalued, or if they see a change in fundamentals is going to happen, then the stock might not really fall. And then if you see, the volumes also kind of increase in this side, because people are expecting that the company is really undervalued and this company's fundamentals might change or something like that, and the stock starts breaking out. Now usually what you want to see in a inverted head and shoulders pattern on a breakout, so we call this the left, the right shoulder, the head, and this is called the neckline, right? The neckline is this line, right? So you have the neckline, left, right, and the head. And once it breaks out, you want to see good volumes coming along with the breakout, right? So you see there's been massive volumes compared to the previous weeks, and the volumes have been excellent on this breakout. And that is the confirmation that this is a really strong breakout. And it's a confirmation that this is the end of a very long downtrend in the stock, right? Now, as a rule, what I want you to check is, if you're trading the inverted head and shoulders breakout, this is how you should trade. First, ensure that this forms right at the bottom of a stock's downtrend. Right now, this stock since 2017, it has fallen almost from this high to this low. It has fallen almost 90%, right? And this is forming right at the end of this massive downtrend. Right now, that's the first thing that you want to notice. Now, sometimes this inverted head and shoulders can also form while the stock is in an uptrend, but that's not very, very common. But if you do find that in uptrend also, you can trade that, but it's mostly found in a stock, in a downtrend of a stock, and that signals the bottom of the stock. So the first rule is this pattern should occur at the bottom of the trade, right? The second rule is, it is good to have that the stock also breaks out from a strong, long-term downtrend, right? Now, if you look at the stock, I'm just connecting that point, and that point there. Now, it is almost close to a long-term downtrend breakout, right? The stock actually has broken out of this long-term downtrend as well, but it is not necessary to also, that this also should be a confirmation for the stock. Now, the only rule I want you to notice is it should form at the bottom of the downtrend. It will be better if it breaks out of the long-term downtrend as well. Now, we look at Neuland Labs and Balaji Mines where this kind of occurs, but that's not mandatory. That's the second rule. The third rule is, on the breakout, there should be volumes which should be accompanying the stock breakout. Now, if the volumes are not very good, then this breakout might not last. Okay, so it might again go back down and start heading lower again. So that's the third rule. And the final rule is, you should buy the breakout only above this highs, right? This neckline. So you should place a buy stop. You just place an order which tells a GTD on Zerodha that buys the stock only about 231.7 or 232, right? If you look at this high, here, it is 231.7. And even here, if you look at the high, it is 231.2. So you buy about 232 with a stop around this low, which is around 170, or you can even keep it at this low, which is 180, right? So that's how you should buy. Stop here, break out above that point, right? So I'm just confirming the rules again. You should buy only if this pattern appears at the end of the downtrend. It's okay it'll be best if it also breaks out of the long-term downtrend along with the inverted head and shoulders. The third, you buy only above that point. And the fourth is volume should accompany the breakout. Now, these are some of the rules that you need to follow when you want to trade the breakout, and that's how you trade the breakout, right? Now let's look at a few examples, right, of the inverted head and shoulders. So first example that I want to look at is Neuland. So Neuland Lab was one of the breakouts that I had posted back in 2020. Once the crash, this was one of the first stocks to come in the radar, and it had a massive breakout at this point. Now what I want you to notice here is, I'll draw this all again just so that you know it very well, right? So this is the inverted head and shoulders. So you have the left shoulder. I'm just going to zoom in a bit. The left shoulder, the head, and the right shoulder. And if you notice here, the left shoulder and the right shoulder both are at the same level, right? So if you look at this level here and this level here, it's almost at a similar level. Now that's also another rule that you can add to this pattern trading, when you're trading this pattern. So the left shoulder and right shoulder should be almost at the same levels, or we call it symmetry. They should be on the same levels, right? And the more horizontal the line is, the better the breakout would be. And on volumes, you see here we have again massive volumes which are coming along with the breakout. And one of the other things that I said which is better to have is also the downtrend breakout, right? Now if you draw this line here, this is also breaking out from this long-term downtrend. Now look at this stock, right? So not every stock will give you the returns that you want, but then this stock gave a massive move after this breakout. So if you look at this breakout from here to here, it went almost up 450%, right? Now obviously it also had a inverted head and shoulders breakdown here. Now we'll cover that in a separate video, but that's also inverted head and shoulders breakdown. Now probably you should have exited the stock at around 9,500 levels, so you might have booked a profit of around almost to 290% or 300%, right? That's the kind of returns that we're looking at in stocks that are really breaking out from an inverted head and shoulders pattern, because they signal the end of a long-term downtrend, which means a long-term uptrend is starting, and that long-term uptrend can give multi-bag returns. Now if you do understand fundamental analysis, you can also combine this with fundamental analysis and look for good companies. For example, Neuland was a good company at that point, and it wasn't that much highly overvalued, right? And that's why this breakout made really good sense at that point. The next stock that I want to look at today is Balaji Mines. Now I'm giving you a few examples because the next time you see such patterns, you must go and take those trades, okay? Now the next stock that we're going to look at is Balaji Mines. Now Balaji Mines also had a similar breakout here, right? Now if you look at this left shoulder here, right, you can also use this pattern over here. This is the left shoulder, then you have the head and the left shoulder, right? Now that's a beautiful long-term downtrend breakout. Now after 2017, if you see here, 2018, the stock has been in a continuous downtrend and it kind of broke out at this point over here, right? And look at the volumes that are coming. The volumes have been rising and it broke out with excellent volumes in the week of June 2020. Now that signals the end of the downtrend for this stock, and then went higher, right? So another thing that I said is you want to also have the downtrend breakout. So I'm just connecting these points. So I'm connecting that point, I'm dragging it. And if you see, this stock also had a breakout here, and that accompanied the long-term downtrend breakout as well. Now when you have an inverted head and shoulders breakout plus a long-term downtrend breakout, a trend line breakout, that's a very strong signal that this stock is heading much higher. Now sometimes these breakouts might tend to come very quickly. In this case, it had a quick move, of, let's say, even if you traded from here, it gave a 80% move in just a matter of few weeks. From June to August, it already gave 100% return. And not every stock would give such kind of returns immediately, but stocks do tend to give good returns, especially if they're fundamentally good. Now Balaji Mines is a fundamentally good company, and till now, if you look at the stock has gone up from this point. It has gone up almost 800%, and even if you take this lowest point, it's up 500%. So one stock like this can really make up your portfolio, can give really good returns. So whenever you find the next bear market coming in and you find such setups, just go and allocate the 5 to 10% of your portfolio value and see if it's fundamentally good and might do really well. A few more stocks that I want to look at, just to give you that sense of how it works really well. Sharda Cropchem is another example. Now here, in this case, the stock, did not break out immediately, right? So as I said, some stocks tend to break out really well, but some stocks don't tend to really break out really well. It takes its own sweet time, but finally it tends to move. Now this was a Sharda Chem, inverted head and shoulders, the left shoulder, the head, and the right shoulder. Again, if you see, this left shoulder and the right shoulder is almost at the same level, but remember the head needs to be below both the shoulders. Now that's a very important criteria also that you have to notice. And then this stock went into sideways consolidation, right? For almost 1 year, this stock went into sideways consolidation, and then it had a massive breakout, and this stock is now heading higher. Now, other point also I said is you need to look out for this trend line breakout, right? You can do also this. Now, this stock also had a breakout here. Volumes were also good accompanying the breakout, right? Now, it never went below this low, which is 258, which is a stop loss. So you buy above that neckline and you keep a stop loss below the swing low at this point, right? That's how you do it. So that's the third stock example. Now I want to give you a couple of stocks which have not done well as well, because you might say that I'm showing the best of best stocks, but I don't want to give you false dreams. What I want to show you is what is a fact, what is the reality, right? Now I'm just going to remove all of this. Now let's take Aster Healthcare DM, right? Now this was stock had a breakout as well. Now you could also draw it slanting like this. You could also draw slanted iH&S breakouts. So this stock also had a breakout here. It went all the way up and it's now again retesting, right? Now, some stocks tend to do this, right? Because there is selling pressure. Maybe the fundamentals haven't changed that much, where the market was anticipating fundamental changes or fundamental triggers. It did not happen, and then people started selling off, and then it's consolidating, right? But still, remember, this breakout is still valid, and this stock still has much potential. Still has the potential to head much higher levels from here. So that's why I say, in case you're really looking at fundamental long-term investment, then inverted head and shoulder breakouts are excellent ways to hold long-term investments, because you will be in profit immediately and you might not be in deep losses. And these stocks finally will tend to perform and might head higher sooner or later. Okay, now the next stock that I want to look today is Sudarshan Chemicals. Now this is a recent breakout that I posted just last week on Twitter, and I want you to also look at this, right? Now again, as I said, this is the left shoulder breakout. The head and the right shoulder. Again, if you see, volumes are coming along with the breakout, right? So volumes are increasing along the breakout, so it looks good. Also, the downtrend breakout is confirmed. So we have downtrend breakout plus inverted head and shoulders breakout, which signals that this stock also has potential to head higher. Now, if you can combine, as I said, with fundamentals, then you might find some really good picks. This is a fundamentally very good stock. So I'm expecting some good levels here on the stock. Okay, now also a couple of more stocks before I close off. Glenmark was another stock that we identified, some time back, and it did also post on Twitter. It did really well, but then the stock has gone into a long-term consolidation, right? Now, if you look at this chart here, this was the breakout that I identified and posted on Twitter. And if you look at the levels here, the left shoulder, right, and the right shoulder, it's almost on the same level, right, around the 320 levels, and the stock had a massive breakout. It also had a massive gap up here, and the stock kind of went into a consolidation mode, filled that gap, and it's kind of going sideways. Right now, as I said, you need volumes to come. On this stock, the volumes weren't that much, but the volumes came here, but then it started going sideways, and this stock is also not broken out of the long-term uptrend yet. At that point, it didn't break out, but now it has kind of broken out, right? But this stock is also a good stock for you to consider for your portfolio, because it has formed a base, a bottom is in place, and now it's just about time before the stock heads higher. The last stock, before we sign off, I'm just going to conclude with this last stock, which is Texmo Pipes. Again, this stock also had a breakout. Again, look at the head, left shoulder, right shoulder, same level. The head went below the shoulders, had a breakout. Volumes came in. This week was the volumes. Then it kind of went headed higher. This stock had a massive potential, right? It went from 60 to almost trading at 100 levels, so 500% return. Now, these are simple rules that you can follow, right? All you have to do is just practice, and you can find some really, really, really good setups and fundamentally great companies that might tend to do well, going forward, and they might really add a lot of returns to your portfolio, and they can do well. Just remember that not every breakout might work. Some breakouts tend to do really well. In this case, this stock gave, in just a couple of years, it gave 500% returns. Some stocks like Wabag are still going sideways, even though with a minor profit. So yeah, so that's how these patterns work. Now, before I sign off, what I want you to do is, in case you want to have more details on this analysis itself, go to my blog, go to the inverted head and shoulders pattern, and you might find some long content on this. Not really long content, but perfect rules on how to trade these setups, right? I've also given you how to trade this pattern, all what I said here. So check out this also and let me know if you have any comments, and if you have any doubts, then we can always discuss on Twitter or on YouTube comment section. But what I want to do this year, what I want you to do this year is, follow me, because I'm going to do a lot of such videos which will help you learn technical analysis in a very, very simple way. It's not really that complex. All you need is some passion, some determination, and some hard work in order to make some money. We are not looking to make 100% returns every year. All you want to make is 20% probably every year on a consistent basis. And if you can make that on a consistent basis, and if you can build up your capital slowly and steadily, then you can make big money. Probably 10-15 years from now, you might probably thank me for these simple techniques that I'm teaching you. Okay, so that's it. I'll leave you here. Don't forget to share the video with your friends and colleagues. Remember, by June 2022, which is 5 months from now, we want to touch 5,000 subscribers.